Hello, friends. Welcome to the dollar rupee special analysis, specifically after last Friday's dollar rupee move towards 89.50. What we see on last Friday, the dollar rupee, there was an up move towards 89.70. During the Indian market, it traded high of 89.54, whereas in global market, it traded high of 89.70 and closed at 89.59. So what actually triggered the dollar rupee blast above 89.00? Here we would like to decipher the probable reasons. To understand what made the dollar rupee to fly above the resistance zone and trade high of 89.70 levels. To understand that one, we need to just go back the previous range. Previous range, dollar rupee was trading in between 87.80 to 88.00 on the lower side and your 88.80 to 88.90 on the higher side. And the rupee was well moving within the range. Even we have seen a lot of interventions from the central bank that dollar rupee started getting tough resistances at this level. So means almost everybody expected that the intervention will be there at this zone, means 88.80 to 89.00. Definitely the central bank is there to defend the rupee from further depreciations. This was the first reason. Second reason is the market was well anticipating the US-India trade means executions, signing the deal between the two countries. If that signing is happening, that means it is positive for the economy and a lot of inflows are expected to hit the market. There was strong rumor during the last week that at any moment the trade deal will be signed off and the press conference is going to take place at any moment. Under these impressions, the people went short, especially the traders and the hedgers went short in dollar rupee, which led the put buyers to pay maximum premiums so that if the trade related positive news hits the market, rupee is going to move down, means the rupee is going to appreciate towards 87.50 or further below. Considering that fact, put buyers went decisively long, even they were paying heavy premium for buying the put options. And also another group of people, another option writers, especially the call writers, also went short above 89.00, anticipating the intervention in that means 89 zone. So two players, one the put buyers and the call sellers, are heavily loaded for rupee appreciations. These are the two reasons that we have seen. In the meantime, what we saw during the Friday morning, we saw that Japan government infused $133 to $134 billion to just help their economy from this volatility. That triggered a lot of buying in dollar rupee pressure. And it created a lot of pressure on dollar rupee. So dollar rupee started moving higher, and surprisingly, the supply around 88.80 to 89.00 that the most of the traders anticipated, that supply went totally missing. And the short sellers got caught into the short squeeze mode. That short squeeze mode took dollar rupee a sharp up move towards your 89.50. So this aspect already happened during that Friday movement, dollar rupee Friday movement. Now, the next thing that we need to understand is what next. Already the price has moved, broke above 89.00 against the majority expectations that interventions are expected. Rupee is not going to be allowed to depreciate beyond that one. Short sellers got caught, gamma blast, and rupee traders became helpless to cut their positions. Now, the next thing is that what we can expect from here. What we can expect from here, for that purpose, we would like to understand the typical behavior of dollar rupee movement. Dollar rupee movement always makes a range and moves for certain period of time. What we see from September onwards, that the dollar rupee made a range on the lower side, your 87.80, 88.00 as a support zone, and 88.80 and 89.00 as the resistance zone. So this zone now is expected to shift upward. Means the dollar rupee pattern is such that always it is making a range, stays for a certain period of time. Thereafter, once it breaks, then it makes another new range. Now, in this case, after this rupee depreciations beyond 89.00 and weekly closing at 89.50 and above levels, so we need to recalibrate the zone. Next probable zone, as far as my understanding goes, is on the support level towards your 88.50 to 88.70 as the new support zone, and the new resistance zone is expected to be 90.50 to 90.70, a 2 rupee band. Now, why the 2 rupee band instead of 1 rupee band? Because already after breaking above the 89, it has crossed 89.70. Now, Monday onwards, means today onwards, we expect a lot of volatilities in the currencies, not only in dollar rupee, because the volatility in dollar rupee is related to the dollar yen and the yen measures that the BOJ is going to take. So we expect a huge volatility across the currency market. And one of the instrument is going to be our dollar rupee. This dollar rupee is expected to be under huge volatility. When under huge volatility, we need to give a particular range. Means the volatility is expected to be little bit, the volatility is going to create a new range, wider range than the earlier consolidated one. So we are expecting a resistance zone towards 90.50 to 90.70 as the expected resistance zone. Here we can expect a lot of volatilities. Why? First of all, whenever suddenly the intervention part will take place, it will lead to rupee appreciations. But again, the natural demand, natural pressure on rupee will make a blast again above towards 90, 90.50 and 90.70 towards that zone. So huge volatility in dollar rupee is expected. Now, the thing is that how to identify the next resistance zone. Next resistance zone, to understand the next resistance zone, we need to see. If we observe that on 23rd September to 30th September, it tried to test the water towards 88.80 to 89.00. Tried several times, failed, and again pull back towards the supports. When means dollar rupee will make a new high, say, suppose 90.50 in our example, thereafter it will try to test the level again and again, but we expect again certain smoothing activities. I want to mean the intervention to curb the volatility in dollar rupee part, which may take the means the level as a next high, and it will try to retest the level again and again, but due to again the presence of the intervention part means from the central bank, we may see again and again testing the top, and again rupee trying to little bit appreciate due to the artificial measures or the artificial interventions part. So whenever we identify such patterns, we need to consider that that zone is going to act as the next or the immediate resistance zone. So this video I'm preparing for the understanding of the market, rupee market, and you act accordingly. Here, two another important aspects we need to understand, that is the first of all, the dollar index. Dollar index is, if I take the monthly chart, what we see, it is making a zone of your 80, 96.30, 96.50 as the lower support level, and 100.30 to 100.50 as the resistance. Now, we are waiting for a breakout from this zone. It already played within the range in June, July, August, September, and October. Now, the month of November, the time is there, means at any point of time, whether it is in the month of November or means most probably during the month of November, we expect a breakout above the resistance zone. Now, why this resistance zone? This resistance zone, if we see, that is your 100.00 to 101.00. Earlier, it was acting as a resistance zone. Then from June 22 till your April 25, it acted as a support zone. Then post zone 2025, again, after breaking the support, the zone started acting as a resistance one. Once the resistance zone is broken out, we expect a move upward. Also, another reason is that if we see there is a W pattern, this W pattern neck, once it breaks and with a strong bullish candle, then we expect dollar index towards 107.00. Here I'm using the word towards 107.00 means I don't want to earmark any particular level, but the movement is expected to towards that line. If in coming months, the dollar index is going to means move towards 107.00 zone, then the pressure is going to be there in dollar rupee also. And also we need to keep a track on dollar yen. Already the yen has depreciated last month, means the current month, towards 157.89. Now the monthly RSI has approached 60. I said approach 60. It is not respected yet, this 60 as the resistance. Now we need confirmations. What confirmations? Whether the dollar yen is resisting at monthly dollar yen is resisting at 60 and respecting, or breaking out of this zone and RSI starts moving above 60 towards 65, 70, and so on. In such a case, if it breaks above the RSI 60, in such a case, a new pressure is expected on dollar yen, first of all. Also, lot of your liquidity, the BOJ or the government of the Japan government is infusing into the market, specifically the BOJ part. So a lot of yen depreciation is expected, but that has two side effects. Now we need to see side effect. I want to mean that what the BOJ is going to take, whether they want to continue with the ultra low rate scenario, or they are going to hike the rate. They are having the tough challenges. In both the two cases, it is going to impact the Japan economy, first of all. Second of all, once the cost of the fund is going to rise above a certain level, we may expect unwinding of the carry trade in yen-related trades. In that case, again, we need to see, closely monitor whether the unwinding of carry trade resumes or not. Once the unwinding of the carry trade resumes in the market, in such a case, there is expected to be a flight of capital from different countries where the Japan has invested their fund. There is expected to be the flight of capital from those countries to Japan. In such a case, also, lot of pressure is going to be on those countries. In our case, it is in India. So we need to typically watch whether the dollar yen is appreciating. Yen is appreciating. Yen is appreciating. Already we saw this 140.50 to 141. It tried several times. Whether it is again means approaching towards 140 and 141 levels. That will indicate that unwinding has started already. That is going to take a lot of pressures from the, means a lot of pressures on our currencies also. These are the things we need to consider while analyzing our dollar rupee movement. So I hope what has happened last Friday, which hit the dollar rupee towards 89.70 and closed at 89.59, and what are the probable ranges, and what are the other clues that we need to keep. Whether dollar index is moving above 100.50 and closing above 100.50 on a weekly basis, and 101.00 on a monthly basis with a strong bullish candle. In such a case, dollar index is expected to move towards your 107, maybe 104, maybe 105, maybe 107, towards that movement. Its pressure we need to see in rupee also. At the same time, we need to see what the BOJ is initiating, because BOJ is also expected to intervene high-handedly in currency as well as in bond market. Their bond market last Friday, we saw the 30-year bond traded high of your 3.40. Just a second. Yes. It made a high of 3.40 and closed at 3.37, 30-year bond yield, which was just consolidating around, means your 3.00 to 3.20 area for a couple of weeks. Suddenly moved higher. Something is happening there also. We need to closely monitor. So our dollar rupee analysis, I'm just closing it here. Hope this is going to help you people to understand what happened and what is expected from here. Thank you and have a nice day ahead. Bye-bye.